Hey there, TaxBots. I'm Justin Spicer from Legal Aid of Southeast and Central Ohio, and I'm here with two attorneys from our tax team, Melissa Skilleter and Luke Menek. Today, we're discussing the question, Am I self-employed? And we're going to talk about what being self-employed means for your taxes. Feel free to comment below and we'll answer whatever we can. To get us started, Melissa, what do we mean when we say someone is self-employed?
You're self-employed if you earn money by freelancing, being an independent contractor, or owning a small business. Sometimes people call it a side hustle. In other words, you work for yourself rather than just being an employee of someone else or another company.
So, Luke, can you give us a few examples of self-employment work?
Yeah, so self-employment work includes income earned from DoorDash or Instacart, Uber or Lyft, odd jobs or side jobs, being paid under the table or working for cash, babysitting, gig or cash economy, buying items and reselling them for a profit. This does not include income from activities where you don't intend to make a profit, like a hobby.
So, what does being self-employed mean for a person in terms of their taxes, Melissa?
All income, even cash income, is taxable. Excuse me. You may hear people say something like, I only have to report the income if it's over $600, or I was paid under the table, so I don't owe taxes. These statements are incorrect. When a person or a company pays more than $600 in a single year to someone else, the person paying the money is required to provide a Form 1099 to the IRS and to the person receiving the money. A person receiving payments for work is required by law to report all of that money they earned, even if they do not receive documentation from the one who made the payment. And working from under the table means that you're breaking the law. Nearly all income is taxable. There are some very limited exceptions to income not being taxed, but money earned from self employment needs to be reported to the IRS on a tax return, even if you don't make much money. Being self employed means that you have to track your own income and expenses. You may also pay more tax out of pocket than if you were an employee. Self employed people not only pay income tax on their earnings, but also self employment tax on those same earnings. The self employment tax is a replacement for the payroll taxes that traditional employees and employers each pay half of.
So, Luke, how do you report self-employment income on a tax return?
So if you're self-employed, you're going to need to file what's called a Schedule C along with your Form 1040. So all American workers file a Form 1040 tax return each year to report their earnings and to calculate the tax that is due. And when you're self-employed, you need to also include what's called a Schedule C, which reports the money you earned from self-employment and the expenses that you paid to earn that money. It helps you and the IRS calculate how much you actually brought home or your net earnings and calculate the tax that will be due on those earnings. Many self-employed people find that they need help filling out the Schedule C form and hire a tax professional to do their taxes. Tax preparers will often charge extra to prepare this form. A nonprofit organization called Prepare and Prosper has really good materials available online to help self-employed workers organize and file their tax information. You can find them at prepareandprosper.org /customer dash tax dash tools. And we'll share a link in the comments to this video. You can also check out our self-employment handbook, which is available on our website.
Melissa, are there any tax credits or deductions available for self-employed people?
Yes, if you are self-employed, you can deduct your ordinary and necessary expenses. Ordinary expenses are expenses that are common and typical for that specific type of business. A necessary expense is one that is helpful and appropriate for that business. It doesn't have to be an expense that the business can't live without, but it has to be useful to that work. We'll talk about more expenses more in a later Facebook video and explain how they can reduce your taxable income.
So, Luke, how do you know if you need to make uh, estimated tax payments?
So when you're an employee, the person or company that you work for is required to take money out of your paycheck, be held to pay your income tax at the end of the year. We call that your tax withholding. And the employer is also required to pay their own money towards employment taxes that pay for Social Security and Medicare. But when you are self-employed, you are the employer, and you're the one that's responsible for making sure that both the income taxes and the employment taxes are paid. To make sure that you pay the taxes when they are due, the law generally says that you have to make estimated tax payments towards the tax that we do quarterly or every 3 months. If you don't make these payments, you can be fined by the IRS, or you may have a tough time paying the tax that comes due in April.
Awesome. Well, thank you, Melissa and Luke, for the great information as always, and thanks to everyone for joining us. Join us next time when we explore the question, Am I being audited? On Friday, July 26th. And remember, you can find this segment on our Facebook page and past tax chat videos on our YouTube page. Thanks, everyone, and we'll see you next time.